Good afternoon. It's Brian Shannon from AlphaTrends.net. Today is Monday, the 20th of October, 2008, and the market closed with a pretty nice gain here today. First thing you might notice here on the daily time frame is just a lack of volume here, and that always gives people a lot of reason for concern. But again, only price pays, and the market was up 5.8% as measured by the SPY. So we had a constructive session, and again, it occurred on lighter volume, so that means that you want to generally just keep your guard up and play a strong defense. But that's generally the case in a bear market, anyways. Obviously, we remain in a bear market. There's nothing here that changes that based on this daily time frame. We still have the pattern of lower highs and lower lows. Perhaps we made a higher low under here last week, and that's something that's going to continue to be important going forward. But right now, that's pretty far away down here at 86 that I don't think it makes sense to keep a stop 12 points away here when the S&P 500 is at 98. Over there on Friday's video, I was saying that there's still no clear sign of a bottom, and I continue to believe that. There's signs, encouraging signs here in the shorter term time frames. For instance, the 10-minute time frame. When we look, we do have this low here, and then the low that I just pointed to on the daily time frame near that $86 level. The level that I thought was more important as far as potential support here for today was at this area here at 91. Right now, I think the more important level going forward is going to be 93.70 or so. If it breaks back below 93.70, then I think the sellers can take another go at it. But right now, here on a 10-minute time frame, we've got the market above that 5-day moving average. You can see it finished very strong into the close, and I'll show you here on the 2-minute time frame that it had broken past this late day resistance, and I pointed this level out as far as the Qs go on the blog late in the day, saying that if it got above this this level of resistance, then perhaps we could see a good afternoon rally, and that's exactly what occurred above that level there. So we've got right now, I think the more important level of support for this market is going to be again right here at about 94, just about 93.70 or so. When we look at the 30-minute time frame, and I don't know what happened there to my scaling, so let me just reconfigure this here for a moment. Here in the 30-minute time frame, we can take a look at some of these trend lines off of various levels in here. We could actually go all the way back there and say that's maybe the more relevant trend line. But from the most recent real violent drop lower, October 2nd, we can take that trend line here, and you can see the market is basically doing battle with it right now. So that's perhaps getting a little bit of attention, and I think that the next level of potential resistance probably ought to be near that $100 level, near this longer term trend line, and then up towards the 105 that we saw on that real big reactive day last week when it gapped higher last Tuesday. So we've got a lot of mixed signals that continue to show in this environment, and if you're a quick and adept day trader, then there are those signs intraday as the market makes these higher lows and works away at this resistance level, that there are opportunities to trade. And for most of the day today, the market was above the daily VWAP. This is when Bernanke was speaking earlier today, but the market did recover from that and was able to hold above the VWAP, and then began testing this high here, which was also relevant to some resistance late in the day on Friday, but it kind of chopped around in there and wasn't really convincing that it was going to go. It took the last 30 minutes or so before it really saw that the buyers came in and took control there. So again, we're healing in here, and the bottom healing is a process. It's not a one-day event. We can always look back in history and say perhaps that was the low, but when we have the evidence to really get involved and stay involved, that doesn't materialize for quite some time. The Russell 2000 was also up, of course, gaining $2.24 or 4.27%. Here also on the daily time frame, it's still consolidating really within this bearish triangle, you could call it. So don't become complacent when we have these big headline rallies and everyone on TV gets all excited. Look at the volume again. Only price pays, but the lack of volume compared to the last 10, 15 sessions is a reason to be a little bit concerned, but not a reason to sell short if you're looking for the place to sell short in here. Instead, what you want to do is you want to continue to listen to the message of the market. Here's what I think to be the most relevant trend line, and you can say we broke it in here. Breaking a trend line doesn't assure that we're reversing. It means that the rate of descent has slowed, so that's a good positive sign here. I think right around 52 is the more important level of support for the Russell 2000 right now. And we look at the 10-minute time frame, you can see that here's that 52 level, basically below this morning's lows. I think is going to be important going forward. We're above the 5-day moving average. 5-day moving average is starting to flatten out a little bit. We can even draw a trend line off that level, but again, I think the more important one is right here, and the market's doing battle with that right now. Getting back above this high here could put another test of this area into play up near 59. So short term, we're seeing some improving signs. It's too early to say that it's the bottom, and for my lower risk type of trading, I like to just take a piece of the moves each day when they present themselves, and if I don't catch them every day, that I know that my cash will still be intact to be able to participate the next day and the day after that, because I'm not exposing myself to too much risk. The financials, again, the area of key resistance remains in this $17 to $18 level. We remain below that, but we were up today 4.2%, and perhaps seeing that we do have a higher low in here. This is going to be very important going forward, though. Breaking below that 14.5 would be, I think, fairly destructive to the market overall. If we take a look at the most recent, most relevant trend line here, you can see that we're basically doing battle with it. We've got these higher lows in here, so I think getting back below about 15.25 or so would put a test of this area, and then breaking that, of course, would lead us back down towards the lows. Don't think that it can't happen. We remain in a primary downtrend. We're deeply oversold. It seems like we should rally. Everyone on TV says we should, but that's not usually how bottoms form. Take advantage of the rallies while they present themselves. Don't get too aggressive on your position and sizing, thinking that you're going to load in all in at the bottom. Instead, trade it conservatively, and remember to take some profits along the way. But these financials are right up to that 5-day moving average. They're not above it yet. Still the weaker group, and really of the major indices, the Nasdaq remains the weakest. It was only up 2.7%, 2.8% today actually, and again the spiders, the SPY, was up 5.9%. So the Nasdaq 100 was lagging all day. I had someone ask me, what are the Qs? Why do I talk about the Qs? These are the Qs. This is the Nasdaq Power Shares QQQ 100 Trust. It's basically a representative of the Nasdaq 100. I know for a lot of people that's obvious, but I guess some people aren't aware, so that's what they are, and the SPY represents the S&P 500. The key level for this market, of course, is going to be last week's high, up near 36.5, but we're here at 33.20, so that's not really relevant right now. If we take a look at the 30-minute time frame, here's how we can draw a trend line in here, and you can see that that remains up probably close to that $34 level. And here, what I was pointing out today was basically on the 2-minute time frame, saying that breaking above this little level of resistance could lead to the rally. We did get the rally. We saw again that it was choppy in here, though. It was very choppy. We were showing higher lows, and then it was finally able to push above there, and it was kind of, weren't sure if it was going to hold, but then last 15 minutes we really got that nice push. Even though we saw low volume in here overall, like we did for the other markets, what we have to look at is, where did the volume come in? The volume came in early right here on a rally, and then on this sell-off it wasn't quite as hard. We saw a big volume spike right here. We saw late in the day that the push past this resistance came on volume, and then relative to that we saw the volume diminish as it was tested, and then we had big volume late in the day. So very short term, it's constructive, but it remains within a primary downtrend and remains a risky, volatile market.